Hello everyone and welcome to Monday Market Must Knows. My name is Merlin Rothfeld. Let's kick things off with three things for your trading week. We'll start things off with economic data, specifically new home sales. Now why is this important? Because new home sales represents money pouring into the economy. It represents optimism, and as consumers are optimistic in buying new homes, that means more money coming into the economy, and of course when money's cheap like it is now, that means that the equity markets will generally move up. Now it's important because we had 776,000 new homes sold in June. You're probably thinking, who cares? I don't care. Well, you should, because it's a record. We haven't had that many homes sold since 2007. That's 13 years we have to go back to find new home sales at that level. Now, it's been a beautiful uptrend. Things have been looking great, but it has been fueled by something rather interesting. This black line here is the 30-year fixed rate mortgage, which is at historic lows. Right now, you can get a 30-year fixed mortgage for about 3%. That is an incredible deal, and that is why we're seeing these new home sales increase. If it continues to move up, expect that equity markets to continue to move up. And remember, some of the smartest minds in the world are working for these new home manufacturers, and right now, things are looking pretty darn good. Next step is going to be the option space, one of the most versatile instruments in the world. The best trading instrument, some people say. It may give you some clues as to where this market may be headed. So let's look at the SPX, which is the S&P 500 index. We'll call that the market. Puts mean that you think things are going to go down. Open interest means the total number of options out there. There was a 2.5% increase in the number of put options. That means people are betting that it's going to go down. That's a bearish sign for our market. Well, it's not all bearish. Let's look at the calls. Calls mean that things are going to be moving up, or the expectation is that things are going to move up. Those increased by 1%. So just those two numbers there show me a slight bearish sentiment for the week. But it changes when we look at the VIX. The VIX is a measurement of fear. They call it the fear gauge, and it's inverse to the markets. So when the VIX is going down, that means people are optimistic, and when VIX is going up, that means they're fearful. This is where the big change happened last week, and maybe give us some signs going forward. All right, so we have VIX, which is the inverse of the S&P. Puts meaning people expect the VIX to continue down. That's a sign of optimism in the market. That increased by 4.5%. You're thinking, that's good. But wait till you see the calls on this. This increased significantly, 12.1% increase in the number of calls last week in open interest. That means that a lot of people are expecting this market to head down. That means that we may see some bearish sentiment this upcoming trading week. And finally, Q2 earnings. We've talked about this over the past few weeks. We have 181 companies reporting this week. Then you look at the S&P 500, 472 of those companies have already reported. So most of the big dogs are out of the way. So let's take a little summary of what's happened so far. 81.4% of those companies have beat earnings per share estimates, 63% beating on revenues. The 81.4% is significant because last time we saw that was back in 2018. Before that, you have to go all the way back to 1994 to have revenue beats like that. That means we are booming right now, and these expectations we're exceeding all the expectations. So that is a very robust market at this moment. Let's look at what we have cooking for this week. The earnings for Monday, nothing. Earnings for Tuesday, you've got Salesforce, Best Buy, Medtronic, Intuit, Urban Outfitters, and Autodesk. Those are some of the major names. To help you with the color coding, black means that they're right back up to the S&P 500 highs. Green means that they're well above those S&P highs, and then red means they're underperforming the S&P 500, just to give you a little bit of clarity there. We'll move on to your Wednesday session. That brings us the Royal Bank of Canada and NTAP. You also have on Thursday VMware, Dollar General, Workday, which will probably get beat up pretty good, Dell Computers, and Marvell Technologies, one of the majors in the semiconductor space. That will do it for your Monday Market Must Knows. A lot of stuff happening this week. Of course, hopefully you have some great trading sessions out there. We will see you next week.